The following is an Investor Brand Network audio production via our audio press release solutions. As a multifaceted financial news and publishing company, Investor Brand Network utilizes its network of more than 5,000 distribution partners as well as other corporate communication tools to introduce public and private companies to a wide audience of investors, consumers, journalists, and the general public. Investor Brand Network's platform connects the investment community with companies that have great potential and a strong dedication to building shareholder value. The following audio press release may feature a client partner of Investor Brand Network. Investor Brand Network may have been compensated for the production of this audio production. Please be sure to read our entire disclaimer for full disclosure.
Network Newswire presents 2022 primed after 2021's record M&A deals. Last year was a monumental year for merger and acquisition activity. Records worldwide weren't just broken, they were smashed by M&A activity reaching a stunning $5.9 trillion, up 64% from 2020, while representing the highest volume since 1980. More than 63,000 M&A transactions were completed as companies found new avenues to growth against the backdrop of a lingering COVID-19 pandemic, rising inflation, and disrupted supply chains. The sharpest increase in deal flow came from the United States, which experienced an 82% surge. Companies from all different sectors and industries joined forces to position for continued future success, including diversified CPG wellness company Flora Growth Corporation, FLGC on NASDAQ, which recently made a significant acquisition to fuel expansion into the U.S. market. Constant consolidation is rampant, involving a wide variety of well-known names, including Microsoft, MSFT on NASDAQ, Activision Blizzard, ATVI on NASDAQ, NVIDIA, NVDA on NASDAQ, and Pfizer Inc, PFE on New York Stock Exchange. PricewaterhouseCoopers expects the momentum for M&A activity to continue into 2022. Flora Growth Corporation added companies with approximately $35 million in revenues and approximately $7 million in EBITDA, per audited financials, through two significant acquisitions in recent months. FLGC's most recent acquisition generated $28 million in revenue, $7 million in EBITDA. Flora Growth has raised approximately $35 million in capital and added several key executives to fuel its rapid growth. Megadeals headline record year. A record $5.9 trillion in M&A activity in 2021 may have reflected some pent-up demand from slower activity in the previous 3 years, catapulting 2021 to easily surpass the previous record set in 2015 of approximately $4.5 trillion. According to professional services firm PricewaterhouseCoopers Deals 2022 Outlook, there were more mega deals, that is, transactions of $5+ billion, in 2021 than ever before, and more than 800 deals between $500 million and $5 billion, far exceeding a typical year of 400 to 500. PwC expects the deal-making pattern to continue in 2022 as companies investigate mergers, divestitures, and other transactions. At a time with high valuations and even higher investor expectations for growth, acquiring revenue is a reliable source of top-line and bottom-line expansion. Writing the playbook. Flora Growth Corporation, NASDAQ ticker symbol FLGC, is not only writing its own playbook on M&A, it's also coming out the gate fast in 2022, strengthening fundamentals, hiring new key team members, and closing another acquisition, one that will immediately add substantial revenue and earnings to the books. Flora Growth's product portfolio spans a variety of verticals and diverse revenue streams, now serving more than 500,000 customers, including, but not limited to, Tonino Lamborghini, Vessel Brand Incorporated, Stardog Loungewear, and Mambe & Mind Natural Skincare, all goods carefully crafted and targeted for the end consumer. Each brand prioritizes natural ingredients and value chain sustainability to create products that help consumers restore and thrive. The brands and market verticals, wholesale, CPG, pharmaceutical research, etc., underscore a strategy of leveraging owned infrastructure and building bespoke brands that gain shelf space with major distributors, including Macy's and Walmart. Flora Growth's recent strategic maneuvers continue the momentum from 2021, when the company completed its IPO and closed the acquisition of Vessel Brand Incorporated, a direct-to-consumer, or DTC, business that experienced 90% year-over-year revenue growth in a cash and stock deal. Flora Growth also forged a new joint venture late in 2021 to distribute award-winning Kalea brand through the Latin American markets and closed an oversubscribed public offering that added $34.5 million to the coffers to keep on executing. The company has a pristine balance sheet with minimal debt, complemented by a large cash balance. Capturing U.S. market share. This week, Flora Growth entered the U.S. market in a major way with its most recent acquisition, a category-leading wellness brand for $16 million in cash and 9.5 million shares of FLGC common stock. The newly acquired company generated audited revenues of $28 million in 2020, along with $7 million in earnings before interest, taxes, depreciation, and amortization, or EBITDA. Benefits abound in this acquisition. Founded in 2017, the company rapidly ascended in the consumer packaged goods, or CPG, wellness space with its portfolio of more than 300 branded products and omni-channel approach that includes an extensive network of over 14,000 retail locations. Flora Growth will also retain key leadership from the acquisition, including Hussein Rakine, who was named to Forbes' 2022 list of 30 under 30 for retail and e-commerce. There's lots of new talent around Flora Growth lately as it grows in leaps and bounds, including a recently appointed Chief Strategy Officer, Chief Marketing Officer, SVP of Global Operations, and a newly formed advisory board. If one is good, two is better. In November, Flora Growth completed the acquisition of Vessel Brand Incorporated for aggregate consideration consisting of a combination of cash and the issuance of Flora common shares. Formed in 2018, Vessel's go-to-market strategy for DTC sales in the U.S. and internationally has been paying off, reaching $6.6 million, trailing 12-month revenue ahead of the acquisition, up by 90% from the comparable period a year earlier. With consideration for the Vessel acquisition, Flora Growth said in December that it anticipates revenue in the range of $35 to $45 million for 2022. However, those numbers did not reflect FLGC's most recent acquisition. The full extent of the synergies won't be known until the integration is complete, but management expects revenue to be amplified as operations and teams are merged. To that end, investors will be eagerly on the lookout for any revisions to guidance when the company next releases its quarterly and full year 2021 results, which could easily serve as another market catalyst.
This audio press release is an original broadcast provided by Investor Brand Network, a multifaceted financial news and publishing company that delivers a new generation of corporate communication solutions, including news aggregation and syndication, social communication, and brand awareness tools. Investor Brand Network may receive payments for the services and solutions provided to its client partners. You should assume that the owners, officers, and directors of Investor Brand Network or financial analysts mentioned in this audio production may hold a position in and may intend to trade the securities on their own accounts. This audio production is not an offer or recommendation to buy or sell any securities mentioned in this audio production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries an investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This audio production by Investor Brand Network is not purported to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by Investor Brand Network as to completeness or accuracy. Such information is subject to change without notice. Please see our full disclaimers and disclosures at investorbrandnetwork.com.